Want to live off of safe, growing, totally passive dividend income? Also want to see that income consistently increase year in and year out all by itself? Would you like to know about stocks that just increased their dividends? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. Dividend growth investing is by far my favorite investment strategy. You almost can't lose as a dividend growth investor. After all, this strategy is all about buying and holding shares in high quality businesses that pay reliable rising dividends. By the very nature of this strategy, you're sticking with some of the best businesses in the world. And that is partially evidenced by those reliable rising dividends. Can't fake cash. You certainly can't fake ever-growing cash dividend payments for years on end without doing a lot of things right as a business. As someone who lives off of dividends, I must say they are an excellent source of completely passive income. And because these dividends are increasing all by themselves, my purchasing power can keep up with or even exceed inflation. Dividend growth investing sets you up to be nearly bulletproof over the long run. Today, I want to tell you about 3 dividend growth stocks that just increased their dividends. Ready? Let's dig in. The first dividend increase I have to tell you about came from Philip Morris International Inc., stock ticker PM. Philip Morris just increased their dividend by 4.2%. Just a solid dividend increase from a company that has been nothing short of magnificently consistent. Consistency is so important, not just in terms of your dividends being consistent, but also in terms of your dividend increases being consistent, because inflation sure is consistent. This marks the 14th consecutive year of dividend increases for the tobacco giant. That track record is as long as it possibly could be, as Philip Morris was spun off from former parent Legacy Altria in 2008. This dividend increase lines up very well with their 5-year dividend growth rate of 3.2%. Again, consistent. And this mid-single digit dividend growth is really all you need when you consider that the stock yields 5%. This is a compelling combination of yield and growth. The payout ratio at 83.1% based on midpoint guidance for this fiscal year's earnings per share is high, but that's not atypical for a mature tobacco business. This is a great stock for market-beating income and inflation-beating growth. It's performed well, up nearly 24% year to date, and in my view, it now looks fairly valued. In fact, I highlighted this stock as an undervalued opportunity back in April when the stock was under $93 per share. In that video, I showed why the stock was potentially worth a bit over $102 per share. With the stock currently at $101 per share, we're basically at fair value right now. But you could do a lot worse than pay a fair price for a great business, especially when you're getting this kind of yield in this kind of environment. Next up, let's talk about the dividend increase that came in from Microsoft Corporation, stock ticker MSFT. Microsoft just increased their dividend by 10.7%. A double-digit dividend increase from one of the best companies in the world. This is what dividend growth investing is all about. Those who focus on high yield, particularly in the junk stock arena, totally miss this. They also miss out on incredible long-term performance by chasing yield. Those who appreciate Microsoft are being amply rewarded. The global tech conglomerate has now increased its dividend for 20 consecutive years. Their 10-year dividend growth rate is an impressive 14.3%. The crazy thing is, even after 20 straight years of growing dividends, I think Microsoft is just getting started with dividend increases. Even after this double-digit dividend boost, the payout ratio is only 30.8%. And that's before getting into the fact that they've got more than $100 billion in total cash on the balance sheet. This dividend is only going up from here, which is good news when you see that the yield is only 0.8%. This stock is up 35% year to date and more than 400% over the last 5 years. Yep, that's the kind of total return that a high quality dividend growth stock like Microsoft can give you. If you're focusing on the yield trees and missing the total return forest, you're doing your money a disservice. I highlighted Microsoft as one of my best long-term investment ideas back in April when the stock was around $250 per share. It's now coming up on $300 $6 a share, but it's likely headed even higher from here. Last but not least, I have to tell you about the dividend increase that was recently announced by Texas Instruments Incorporated, stock ticker TXN. Texas Instruments just increased their dividend by 12.7%. Another high quality dividend growth stock, another double-digit dividend increase. It's like deja vu or something. In all seriousness though, how can you not love this? All you have to do is hold shares in a world-class enterprise and you get a near 13% pay raise. It's a beautiful thing. This is the 18th consecutive year of dividend increases for the semiconductor company. Texas Instruments flies under the radar, overshadowed in the tech arena by some of the juggernauts out there like the aforementioned Microsoft. Nonetheless, this is a dividend growth all-star. This dividend increase doesn't quite stand up to their 10-year dividend growth rate of 22.5%, but I doubt any shareholders are complaining. Also, the stock yields 2.4%, so we're talking about a yield and growth combination that's well into the double digits here. And with the payout ratio of 64.2%, the dividend is handily covered. This stock is up more than 40% over the last year, and the valuation looks a bit stretched. Most basic valuation metrics are running ahead of their respective recent historical averages. For instance, the price-earnings ratio of 26.9 is notably higher than its 5-year average of 24.2. So this is a stock that usually commands a premium in terms of its earnings multiple, but this current premium is heavy. If this stock corrects by 10% or so, however, it's a high quality tech name that should absolutely be on your radar. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these dividend increases. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.